Welcome back to the channel. If you put $1,000 into QLDY, the Defiance NASDAQ 100 Lightning Spread Income ETF, here's what you could expect over 1 year and potentially 5 years. Craziest part of this ETF is they're claiming that you will get paid out twice a week in distributions. Get into this possibly incredible ETF, first let me introduce myself. My name is Wes, and for the last 3 years I've been researching ways to make passive income in both the stock market and in cryptocurrency, and want to share my results with you, either good or bad, through this channel. If that sounds good to you, make sure you subscribe to the channel, and please leave a like on this video. I greatly appreciate it. Okay, let's get into it. QLDY is built to deliver bi-weekly income using its lightning spread strategy on the NASDAQ 100, utilizing 0 DTE options or 0 days to expiry option spreads. As of its September 2025 launch, yield figures haven't been firmly established, but the strategy aim is frequent payouts with potential for higher total returns relative to monthly covered call ETFs. Investors should note that QLDY's active management and option spread structure means yields will fluctuate depending on the market volatility and options performance. Over 1 year, a $1,000 investment has the potential to produce regular cash flow with bi-weekly distributions that adjust to market conditions. While the initial yield may be lower than ultra high yield products like QYLD or YMAG, it is designed to minimize net asset value erosion and capture both option premium and index upside when possible. In real numbers, annualized yield targets for funds with similar 0 DTE strategies typically range from 14 to 18%. That's $140 to $180 income on your $1,000 per year. Though actual results may vary and initial 2025 data is still very limited because the fund is so new. Here's a list of all their holdings currently. I've been looking towards the next 5 years. QLDY's structure means investors could benefit from compounding bi-weekly income with less principal erosion compared to ETFs that sell calls at the expense of almost all upside. If payouts average 16% per year and NAV remains stable, you'd collect around $800 in income by year 5 for each $1,000 invested, though future performance will depend on evolving market conditions and the fund team's execution. However, these returns are not guaranteed. Key risks include periods of low NASDAQ 100 volatility, leading to smaller option premiums and possible NAV declines during sustained bear markets. I wanted to show you these holdings because most of it is in the NASDAQ and their call options for 12/19/25, and also in the XND, which I figured out is the micro index. I did not know that, and maybe you don't, maybe you do, but that is those are the two biggest holdings, and those are both call options. Okay, so let's dig into this chart. So far, when it launched, it got up to about $51. The bottom has been at $49.92. So if I were interested in this strategy, this ETF, I would probably go around $50 to $40. Yeah, like right around $50 would be a buying zone for myself. I don't know how this is going to work long term with doing the 2 payouts a week. I know 0 DTE options are very difficult to do because I've done them before in the past and they're not my favorite. I like longer term options. At the same time, if they have a team that's good, then this could be a good possibility for long term income. So far, this fund is a wait and see for me. If we look at their Twitter, I was trying to find to see if they had any updates on this fund, and I cannot see them except for the original one they did on September 18th. So let's wait and see on this one. That's my opinion. I appreciate everybody watching, and if there's any ETFs you want me to cover in the future, please leave them in the comments. As always, thank you for watching and have a great day.